Banking is a complex world where one of the biggest challenges is keeping up with new trends and regulations. But change can sometimes be for the better. Louisa Preston spoke to KPMG about how financial institutions can capitalise on change and the positive impact it can have on business models.
Well, joining me now is Harps Sidhu and Cauter from KPMG. Thanks very much for joining us this afternoon. Cauter, if I start with you, what are the largest regulatory challenges facing international banks operating within the UK at the moment?
I think we're certainly seeing a really wide landscape of regulatory change, but I guess I'd distinguish between two halves. So we have regulation coming strictly from the UK, being in the UK, but also increasingly we obviously have regulation being handed down from Europe. So keeping that in mind, I have been doing a lot of work with clients, in particular from the UK perspective, on the senior managers regime. And I think what we're finding there is we have a regime which is about much more individual accountability, much more well-evidenced support for how you run your business, how you manage your risks. And that's a real challenge for the international banks, because you get into structures which are global and global business lines, and they're suddenly having to think about specifically, what do I do in the UK only?
They're big challenges, aren't they?
There are a multiplicity of questions around how they service their clients, how markets operate, how clients express strategies, and where and how the banks operate in the entire value chain, which is different depending on the type of organisations. Global full-service, large corporate investment banks, of which there are relatively few now that have a full-service offering. There are the more monoline trading houses who now have to be much smarter and much more agile about how they play in the value chain, the pieces of it, how fintech will disintermediate various parts and in some cases re-intermediate various of the banks into that value chain and how they play in it. And then for the mid-tier banks, there's a whole swathe of new strategic considerations about staying under, I guess you'd call it pejoratively, staying under the radar of a lot of the implications of regulations such as MiFID II, which fall into that EU-wide bucket.
Cauter, realistically, what do you think the regulations are going to achieve?
The regulations are targeted on getting people comfortable that it's not just a club of people who are in the know. It's there for everyone to use. Prices are transparent. The code of conduct, which you can expect when you interact in the markets, is the same across the board. So it's about increasing confidence, but at the same time, therefore, putting quite a lot of pressure on the financial institutions to increase their monitoring and surveillance of their own participation in that market, so that they're actually seen to be on the front foot instead of on the back foot with managing risk, thinking about outcomes for customers, making sure that actually markets are open, accessible, and dealing in a fair way with all participants.
And how do you think financial institutions are going to cope with that?
Well, I think that there's a clear regulatory as well as societal imperative to achieve fairer outcomes and have markets that are seen as both fair and effective. That's played out to be a very complex debate. But then we talk a lot about cultural change in the banks, and I think the key to the cultural change is the acceptance that it's part of those organisations' role to ensure the fair and effective functioning of markets and to at least consider conduct type issues and what outcomes you're achieving for your clients and customers.
So this will be better for the customer in the long run?
While transparency and a focus on fair and effective is really important, we also need to make sure that markets continue to operate effectively as well as fairly, that they continue to offer choice, that they continue to recognise that different market participants have different appetites for risk, for example. So I think we just need to watch quite carefully in the coming years that we don't tip the balance too far in the direction of no choice, too much protection, which actually means that you have customers also not getting the outcomes they're really looking for from the markets.
Harps Sidhu and Cauter, thank you very much for joining us.
Thank you.